few weeks ago, I started with a question that I couldn't stop thinking about. Is there a reliable, repeatable way to 10x your money? Not a lucky punt, not one person story on Reddit, a genuine, consistent method, something that actually holds up when you run the numbers. So I spent time going through every serious option I could find: crypto, individual stocks, property, angel investing, index funds, even starting a business. I looked at the data behind each one and asked the same two questions every time. Can this actually 10x? And can it do it reliably? Some of them surprised me, a couple of them looked very promising right up until they didn't, and the conclusion I landed on is probably not what you're expecting. This is everything I found. Before I go through each option, I want to be clear about the criteria I'm using, because this matters. I am not asking, has anyone ever 10x'd using this method? The answer to that is yes for almost everything. I am asking, if you used this method consistently with a reliable amount of capital and a reasonable time frame, what is the realistic probability of 10x returns? That's a much harder question, and it's the right one. I'm also going to be honest about the downsides of each option. Not to be negative, but because understanding the downside is exactly how you make good decisions. Anyone who only tells you the upside is selling you something. Right, let's go through them. Candidate 1. Crypto. Crypto is the obvious starting point because the 10x stories are real. Bitcoin went from roughly 150 in 2015 to over 15,000 in 2017. Ethereum has done similar multiples multiple times. These are not made up numbers. So on the upside test, can this 10x? Yes, clearly yes. But here is where it gets complicated. Bitcoin also dropped 84% from its 2017 peak. It dropped 77% from its 2021 peak. If you bought at the wrong point in the cycle, which most retail investors historically have because they buy when it's on the news, you didn't 10x. You lost most of your money and waited years to get back to flat. And this is the core problem with crypto as a reliable vehicle. The returns are real, but the timing dependency is enormous. You need to buy in a bear market and sell in a bull market. That sounds obvious, but in practice, most people do the exact opposite because human psychology pushes us towards buying when things are exciting and selling when things are scary. There is also no underlying earnings, no cash flow, no dividends, nothing to anchor a valuation to. The price is entirely driven by what the next person is willing to pay. That's not necessarily wrong, but it means volatility is structural, not temporary. Verdict on crypto. Can 10x, cannot do it reliably. The variance is too high and the timing dependency is too great for this to count as a consistent method. Candidate 2. Individual stocks. This one is more nuanced and I want to give it a proper treatment. There are stocks that have 10x'd in reasonable time frames. Nvidia is the recent headline example. It's returned well over 10x in the last 5 years. Amazon, Apple, ASML, these have all produced extraordinary long-term returns for early holders. And if you had picked any of them early, you would be telling a great story right now. Here is the problem. You need to pick them, not in hindsight, in advance. And for every Nvidia, there are hundreds of companies that looked equally promising and went nowhere or went to zero. Small cap stocks in particular have an attribute rare that most don't appreciate. The majority of individual companies underperform a simple index fund over a 10-year period. There is a study by Bessembinder that looked at the US stock market from 1926 to 2019. He found that just 4% of stocks accounted for all of the net wealth created by the US stock market. The other 96% collectively matched or underperformed treasury bills. So the individual stock that 10x's exist, but identifying it in advance is close to skill plus luck than pure skill. And the consequence of being wrong? Concentration in one company that fails can be severe. Verdict. Possible to 10x, not reliably, not systematically. Requires either exceptional research, exceptional luck, or both. Candidate 3. Property. Property is the one a lot of people in the UK treat as almost guaranteed wealth creation. And over very long time frames, UK property has performed well. Average UK house prices have increased roughly 7-fold since 1990. But 7-fold over 30 years is not the 10x story it sounds like for a few reasons. First, those are nominal returns, not adjusted for inflation. In real terms, the gains are more modest. Second, if you factor in maintenance cost, void period, if you are a landlord, stamp duty, estate agent fees, the opportunity cost of the deposit, the actual return on capital is lower than headline price increase suggests. Now, and this is where it gets really interesting, property with leverage is different calculation. If you buy a 200,000 property with a 40,000 pounds deposit and it rises 20% in value, your deposit has effectively doubled. Leverage amplifies return significantly. The problem is that leverage amplifies losses in exact same way. A 20% fall in property value wipes out your deposit entirely. And anyone who bought UK property in certain regions in 2007 and needed to sell in 2009 knows exactly what that feels like. Property also has a practical constraint that most other assets don't. It's illiquid, it requires active management, and it's increasingly burdened with regulations for landlords in the UK. It's not passive, it's a secondary job for many people. Verdict: property has produced strong long-term return and leverage creates genuine 10x potential, but it's not passive, it's illiquid, and the downside risk under leverage is real. Possible, but with significant complexity and capital requirements. Candidate 4. Angel investing. This is the one where the math on a 10x is genuinely most favorable and also the least accessible. Professional venture capital funds build portfolios expecting that 60 to 70% of their investments will fail entirely. A further 20 to 25% will return capital or make small gains. And roughly 5 to 10% of investments produce returns so large, 50x or 100x, that they cover all the losses and generates the fund's overall return. So in VC, 10x is considered a good outcome on an individual investment. The problem for most people watching this is access. The companies that produce 100x returns are typically not accessible at the stage where the upside is the greatest. Seed stage startups funded by angel investors with specialist network, industry knowledge, and offer a minimum check size of 10,000 to 25,000 pounds per company. To build a properly diversified angel portfolio, enough companies that winners can cover the losers, you realistically need hundreds of thousands of pounds and a strong network. Without that diversification, you are not doing VC investing. You are making a concentrated bet on one or two companies with an extremely high failure rate. Verdict: the asset class with the most 10x potential but with the highest failure rate, the lowest accessibility, and the most demanding capital requirements. Not a realistic option for most people. Candidate 5. Index funds. And now we arrive at the boring one. A globally diversified index fund tracking something like MSCI World has returned roughly 8 to 10% per year over the long run. Let's use 9%. At 9% annual returns, using rule of 72, you double roughly every 8 years. To 10x, you need approximately 3.3 doublings. That's around 26 to 27 years. So the answer to can an index fund 10x your money is yes. Absolutely and reliably, just over a time frame that feels much longer than any of the other options. Here is what makes this actually interesting though. Every single candidate I have looked at today has a failure mode. Crypto has extreme volatility and timing dependency. Individual stocks require picking winners in advance. Property requires leverage, liquidity risk, and active management. Angel investing requires capital and network access. Index funds essentially have one failure mode. You don't stay invested long enough. That's it. That's the risk. And it's a risk that's entirely within your control. The 10x isn't dramatic. There is no moment where you feel like a genius. But it happens with a reliability that nothing else on this list can match. Candidate 6. Your own business. I want to end with this one because I think it's underrated in this conversation. A business is the one vehicle on this list where you control the inputs. You can work harder, get better, make smarter decisions. The return is not purely a function of market forces you can't influence. Business also has leverage of a different kind. The leverage of your own skills and time. If you build something that generates £5,000 a year in profits from a small initial investment, you have already 10x the capital. And business can be sold for multiples of the annual profit, so the exit value can be substantial. The failure rate for small businesses is genuinely high. Most research puts it around 50% failing within 5 years. But the failure mode is usually gradual, and the downside is typically time and effort rather than total capital destruction. Of everything on this list, building a business is probably the most realistic path to a 10x return in a compressed time frame for someone willing to put in the work. It's also the least passive and the least scalable beyond one person's capacity. The verdict. So after going through every option, here is where I landed. There is no reliable, repeatable way to 10x your money quickly. That's the honest answer, and I think most people already sense it's true. But there are reliable ways to 10x your money. And the method that gets you there the most consistently, with the fewest ways to blow up along the way, is the one that takes the longest. That's not coincidence, that's the trade-off. High returns, short time frames, and low risk cannot all exist at once. Every asset class I looked at gives you two of those things at best. The one that promises all three are either fraudulent or survivorship bias at work. What this means practically: if you are investing money you won't need for 20 plus years, an index fund will almost certainly 10x it. If you want to accelerate that, you either need to build a business or you need to take on risks that most people aren't fully prepared for. And knowing which of those is actually right for you, that's the actual question worth answering. If you want to understand how to get started on investing journey, I have a video that covers it in detail. And if this kind of thorough, no hype breakdown is useful, subscribe. This is what this channel does. Thanks for watching, and I will see you in the next one.